All right, well, gold and oil prices are getting whipsawed in the afternoon trade as President Trump said Iran was standing down. Both Brent and crude oil prices are sinking roughly 4%, moving closer to 5% after the president's remarks. And joining us now to discuss is Path Trading Partners co-founder and chief market strategist Bob Iaccino. And Bob, I just want to get your thoughts. I mean, obviously, when we're watching oil overnight, obviously the flip side to what we're seeing right now. So what do you make of the swing that we're seeing in oil as the president again kind of spoke to a path to peace in the Middle East?
Well, Isaac, I think it's pretty obvious to active investors and traders what's happening here. The worst case scenario for the U.S. economy was some sort of activity in the Strait of Hormuz that cut off crude oil supply. That's the worst case short term. I'm not smart enough to say if cyber attacks would have been worse, right? I'm a commodity analyst and a stock analyst. So from the perspective of the overall markets, some sort of major disruption to the supply could have spiked prices in the time when the Fed really doesn't want to be involved to try and calm any sort of inflation fears, especially if they're from exogenous sources like energy prices. The tactic that Iran took for retaliation, and your previous guest said it seems somewhat of a concession, a neutered retaliation, is really good for the markets overall. The interesting part to me is crude oil has now gotten back into its old channel. So it's not just responding to the lessened geopolitical tensions. That old channel was generally about a high of, say, 59.70 to 60.50 was the upper end of that channel. And we had operated inside that channel since about May of 2018, never breaking out of it. Now we've got the EIA figures this morning, which showed a little bit less demand on the ground in the refinery utilization figures, and then a fall of the supplies of crude oil to basically right around the 5-year average, but gasoline 5% above the 5-year average during a time when crude oil seasonality is pretty weak.
And then, I mean, we're watching gold as well. It's kind of painting a similar picture when we talk about risk on, risk off. The drop in gold after the president spoke, kind of painting the same picture in your mind.
Yeah, a couple of things about gold. Gold obviously has the sort of luxury, no pun intended, to kind of keep its bid. The longs in gold have been getting long based on other geopolitical tensions like the trade war since about 1495. So right now where gold is, there's not a lot of pressure to sell it off like there is for the speculative crude oil positions. So gold can kind of hold up and see if what the president said about Iran standing down is actually the case. See if the way the president implied that negotiations were the next step via NATO or globally, see if that's actually correct. Gold doesn't necessarily need to sell off as much. Also, with commodities, you always have to look at seasonality. It's always a factor. And gold seasonality from January to March is actually pretty strong. So there's a factor there as well with a tailwind.
So we saw markets breathe a sigh of relief. We saw the S&P 500 hit all-time highs. But in terms of oil specifically, so most of us are saying this is a de-escalation of tensions with Iran, but President Trump is escalating sanctions on them. So do you expect some more reaction in oil?
Well, I think that's part of why we're back into the channel. The sanctions reduce demand. They reduce economic activity just generally. How big the sanctions are, I don't know. I don't know what the sanctions are, what parts of the economy they affect, and whether it's going to affect transportation or energy at all. But any implication of decreased global economic activity, which, as you point out, these sanctions will mean that, are going to decrease demand. And crude oil, save for the geopolitical factors, has been a demand story. The demand based on potentially trade tensions easing has not appeared yet. Certainly wouldn't. We don't even have the deal signed yet. We don't even know if the deal, phase one with China, is going to be signed. So if that gets done and if demand appears, we could see us get back above 60. But that's the fear I have, is it's a demand story right now. And since the Iranians potentially decreasing supply seems to be off the table, at least for today, it's a much weakened story.
Yeah, and Bob, I mean, as our last guest just mentioned, with the regime backed into a corner, you never know if it could then shift back into a supply story. If anything, regarding the Strait of Hormuz, as you highlighted, a quarter of the globe's oil production passing through that straitway. Something to keep an eye on. But Bob Iaccino, thank you so much for joining us. Appreciate you taking the time. And Kristen Myers, thank you, as always, for sitting down as well. Coming up, we'll head out live to CES in Las Vegas to speak with